Hello and welcome. I'm James Preston for Kalkine TV and this is the Global Markets Roundup live from Sydney. Let's dive into some key highlights and happenings from Friday, starting with the US market. Global equities and benchmark US bond yields tumbled on Friday in volatile trade after data showed US job growth slowed considerably in November and the Omicron variant of the coronavirus kept investors on edge. MSCI's All-Country World Index fell by 0.81%. Benchmark US indices closed lower on Friday, December 3, capping a topsy-turvy trading week marred by concerns over higher inflation and the Omicron threat overseas. The S&P 500 slipped 0.84%, the Dow Jones fell 0.17%, the Nasdaq Composite fell 1.92%, and the small-cap Russell 2000 declined by 2.12%. The US unemployment rate fell to 4.2% in November, the lowest in 21 months according to the Labor Department. The economy also added around 210,000 jobs in October. Consumer staples and utility stocks were the top gainers on the S&P 500 index. Consumer discretionary, technology and financials, however, were the biggest losers. 3 of the 11 sectors stayed in the green, the rest bleeding in the red. And now it's time for a very small break, but stay tuned as I'll be back with UK and Australian market updates in just a moment.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With Kalkine TV.
Welcome back, it's great to have your company. I'm James and you're watching the Global Markets Roundup show exclusive to Kalkine TV. European shares fell on Friday, hitting session lows after a downturn in US stocks on a tech slide and fears around the Omicron coronavirus variant hitting economic recovery. The pan-European stock 600 erased morning gains to close down by 0.6% after swinging between losses and gains all week on worries over the potential impact of the newly detected variant and the US Federal Reserve's recent hawkish turn. Feeling the pressure of a subdued Wall Street session, markets in the City of London retraced marginal gains, with the headline stock average FTSE 100 struggling slightly above the psychological level of 7,100. Shares of the market capitalisation leader AstraZeneca fell nearly 1%, emerging as one of the biggest drags on the index. Shares of Rio Tinto, Glencore, BHP Group and Anglo American also fell sharply, and these shares cumulatively provided the majority of negative points to the index. Moderate upswing in the shares of Diageo, Unilever, HSBC Holdings, British American Tobacco, Reckitt Benckiser and Prudential helped in offsetting some of the losses. The stocks National Grid, BP and Royal Dutch Shell were the only shares that gained more than 1% among the top 20 components by the market cap. The domestic benchmark FTSE 100 declined by 0.19%, whereas the mid-cap heavy FTSE 250 dropped by 0.25%. Japan's Nikkei reversed course to end higher on Friday, led by travel and leisure shares, as investors scooped up stocks that were beaten down amid concerns over the impact of the Omicron coronavirus variant. The Nikkei share average rose by 1%, the biggest percentage gain in 3 weeks. The index fell as much as 0.59% earlier in the session, posting a 2.5% weekly drop. China stocks closed higher on Friday as consumer staples and chip makers gained, while huge overseas money inflows also helped to lift A shares. The blue chip CSI 300 index rose by 0.9%, while the Shanghai Composite Index gained 0.9%. South Korean shares ended higher on Friday, posting their biggest weekly jump in 7 weeks, supported by buying from foreign and institutional investors, though gains were capped ahead of US payroll data and, of course, the Omicron variant. The Kospi closed up by 0.78%, extending their gains into a third straight day. Taking a look now at Aussie markets, and the ASX 200 closed 0.2% higher on Friday. And in terms of commodities, let's have a look at the bond yields firstly. 2-year yields for the US stood at 0.59%, while for Australia it stood at 0.62%. 5-year yields for the US stood at 1.13%, while for Australia it stood at 1.29%, and for 10-year yields, the US had a 1.34%, while Australia stood at 1.6%. The dollar index rose by 0.07%. The euro also gained 0.06%, while the yen fell by 0.36%. On the other hand, the Aussie dollar is on the edge of falling to an 18-month low after a dismal session on Friday. Oil prices also remained mixed last week following OPEC's comments that it will act if demand weakens. Brent futures rose 21 cents, while the WTI crude ended 24 cents lower. Gold prices surged as COVID-19 concerns and lower bond yields boosted demand for the yellow metal. US gold futures settled 1.2% higher. And lastly, in the world of crypto, $400 billion has been wiped off the market over the weekend, with Bitcoin falling 5% in the past 24 hours. All right, well, that's all for now. Stay tuned to Kalkine TV for the latest market updates, business news, and exclusive interviews. I'm James Preston, signing off for now.